How's it going today, guys? So what we're talking about today is some of my favorite reasons to invest in real estate. So a lot of people have a very bad stigma about real estate as a result of the 2008 housing bubble / subprime mortgage-induced recession. And as a result, many people have just written off real estate as a bad investment. They say it's a good way to lose your money, and that scared a lot of people away from real estate investing. But the truth is, guys, historically, the average home increased in value by 5.4% a year from 1968 to 2009. So in general, real estate does appreciate in value despite what happened in 2008. So if you're buying a piece of real estate in a good area, in a good neighborhood, that should appreciate in value. And those who are afraid of real estate because of what happened during the housing market crash may be missing out on a valuable investment opportunity. So here are the 4 reasons that I see real estate as a good investment. Number 1 is it's a tangible asset. What I mean by that is that real estate is a brick and mortar investment. It's a physical investment that you can see, you can drive by it, and it's something that is physical as opposed to a stock or a mutual fund that is a non-physical investment. As a tangible asset, the benefit is that it is something that you can improve upon. So you can take that asset, do upgrades to it, maybe you put a new roof on it, maybe you reshingle it, you repaint it, and you then increase the value of that asset. So it's something that you can improve the value of. You are also in complete control with a real estate investment, not as much as you are when investing in a stock or a mutual fund, because in those cases, you're relying on the competence of others who are making the decisions for you when you're investing in a stock or a mutual fund. So that may be the board of directors or the people who are in charge of the fund itself and determining where the money goes. But with real estate, you're calling all the shots because you own that property, and if you want to basically do things to that property to increase the value or decide to sell it, no matter what, you're in control of that. You're not relying on the competence of others. And as of lately, I don't know if you guys are keeping track of stuff, but what I've been seeing a lot of is a lot of CEOs and companies or people going out and saying bad things or being racist or things like that or making bad decisions, and it just blows up because it gets shared so much, and that alone can affect the value of a stock that you're invested in. So I certainly wouldn't want to be invested in a stock where the CEO does something racist or does something that's not right, and as a result the stock price goes down and people are very angry with that company as a result of one person. So that's some of the risks that you have with stocks, is that you're relying on the competence of other people. But with real estate, all of the decisions that you're making are your own decisions. So that's one of the advantages of it. And the biggest advantage to this, guys, is that real estate is something you can live in. It's a livable asset. So if push comes to shove, you can live inside of a house. You can't live inside of a stock. So when you're investing in real estate, it's like worst case scenario, it provides housing, it provides shelter for you that a stock or other investment does not provide for you. Number 2 is the potential for residual income. Now, real estate supplies in most cases a tax-free cash flow after claiming depreciation as well as mortgage interest deductions. And a positive cash flow is possible with real estate in a good area. That is where your expenses, or anyway, the rent that you're getting for that property is more than all of your total expenses, and as a result, you're getting cash every single month that you can set aside for any foreseeable repairs or possibly another investment down the road. Now, if you own the property free and clear, you will very likely have a positive cash flow because you're not making those mortgage payments. And many people look at real estate and say that it's a passive income source, and unfortunately, a lot of people out there sell it as such. It's definitely not a passive income source at first. It's an active income source, but it can become passive over time if you eventually own enough properties to bring in management. At that point, it can be a completely passive investment where you're just writing the checks for repairs and expenses and collecting the rent each month. And even if you break even on real estate to the point where the expenses are equal to what you're getting for rent, you are still building up free equity over time. So when you go to sell that house, you have equity built up, or if you pay the house off completely and sell it down the road, you own it free and clear, and you never paid for that mortgage because you had somebody in there that was paying it through rent. The third reason that I like real estate as an investment is for diversification purposes. So one of the cool things about real estate, and a lot of people don't realize this, but your own home is actually a forced retirement savings plan, because most people think of their mortgage payment as just a monthly expense. But what they don't realize is that every dollar that goes towards principal is money that builds equity over time. And as we've said here, it should appreciate in value. So it's a forced investment. So people, when they get older, maybe they decide to sell their home and consolidate into a smaller place. they now have extra money. Or if they go into assisted living and they sell their home, they now have money that was basically a forced retirement savings plan. And that's one of the cool things about your own home, is that it's actually an investment. I mean, it's not the best investment as far as, you shouldn't just solely be paying your mortgage and saying, okay, when I get older, I want to live off of what I sell my house for, or do a reverse mortgage or something like that. You don't want that to be your sole retirement plan, but it is something to consider as far as real estate goes. Now, investors should diversify because you don't want all of your eggs in one basket. So you don't want all your money in stocks. You don't want it all sitting in bonds or sitting in cash. You want a mix of everything, just that way you have broader exposure. Now, real estate may lower the overall volatility of your portfolio as well, depending on market conditions. So it can be a way to decrease the overall volatility of your portfolio. And what's cool about real estate too is that real estate has a low or negative correlation with many other major assets. And that's another way too that it can lower the volatility of your portfolio. But just in general, as far as investing goes, we all know that greater diversification provides lower risk. So people who are solely involved in stocks, or maybe you have some stocks and bonds and mutual funds, you might want to consider diversifying into real estate to have broader exposure and lower your risk and just have your money in different places. Number 4 is inflation hedging. This is one of the coolest things about real estate, is it's a very inflation resistant investment. So basically, as GDP or gross domestic product goes up, real estate demand increases. And that's basically because as economies expand, the demand for housing also increases. Now, whenever there's a higher demand for real estate, there is a higher rental rates as a result, and there are also higher appreciation rates of the housing. Look at any big area, look at the, like Silicon Valley, any of the housing around that, when that became a hot area, many people would call that a bubble, but that's when the housing prices go up more than they are in the surrounding areas because that's a good economy, and there's a lot of people investing in that area, and as a result the need for housing increases, and if the supply is not met, the demand increases, and that's when you see higher rental and appreciation rates. So when they can't spread out and build more housing, you just have to work with what you have. That's when you're going to see those rental rates and appreciation rates increase. And what's cool about this is that, so inflation is essentially passed on to your tenants through rent, and the inflation also fuels appreciation of that asset, making real estate a good investment because in many cases real estate outpaces, or the real estate appreciation rate will outpace the rate of inflation. So that's the 4th reason that I like real estate as an investment. But anyways, guys, this has just been kind of like an ongoing series talking about real estate. I've been planning on getting into real estate myself and investing in real estate. So I've been trying to do videos here and there about real estate as I'm researching and learning about stuff. Whatever really interests me, I try to throw it all together in a video. But if you guys enjoyed this video, feel free to drop a like. If you guys are new to the channel, please consider subscribing to be notified of any future uploads. And as always, I thank you guys for watching this video.